Hi, and welcome to this session on making the most of your KiwiSaver. My name is Amanda Godderidge, and I'm a financial advisor who is passionate about helping people to make KiwiSaver work in the best way possible for them, depending on their work and life stage situation. Today I'm going to talk about the basics of KiwiSaver, how it can work for both salaried and self-employed people, and what I can do as an advisor to help you with your KiwiSaver. The KiwiSaver scheme was launched here in New Zealand in 2007 as a way to encourage New Zealanders to save for their retirement. Although the name of the scheme makes it sound like KiwiSaver is some sort of savings account, it actually works quite differently to one. Let's consider some of the differences between a savings account and a KiwiSaver. With a savings account, you will have opened the account, so you will know which bank it's with. Generally, it's only you putting money in. You put money in and the balance goes up. You take money out and the balance goes down. Your savings is in cash. There is an advertised, generally low rate of interest you'll make on your money, and tax on the interest or extra money you make is set at 28%, 33%, or 39% depending on your income. With KiwiSaver, the process of starting one very much happens in the background without much direct involvement from you if you are an employee. Eligible employees aged between 18 and 65 are automatically enrolled. You, your employer, and the government put money or contributions in. When money goes in, your balance can go up or down. You can't take out money whenever you like, for good reason. Not all of your KiwiSaver money is in cash. It is invested into many other things, for example, company shares and property. The money or return you make on your investment will change day to day, but the return over the long term is generally higher than a savings account. Tax on the return or extra money you make is set at 10.5%, 17.5%, or 28% depending on your income. So what happens in the background when you are enrolled with KiwiSaver through your employer? The Inland Revenue Department, or IRD, is the central administrator of the KiwiSaver scheme in New Zealand. Your employer will let the IRD know you are working for them, and you will be automatically enrolled in KiwiSaver. If you don't have a KiwiSaver provider already, you will be enrolled with one of 6 default providers. By default, your contribution will be 3% of your pre-tax salary. This will come directly out of your pay and go to the IRD and then into your KiwiSaver. You can choose to increase your contribution to 4, 6, 8, or 10% of your pre-tax salary. Most employers will contribute the equivalent of 3% of your pre-tax salary to your KiwiSaver as well. However, their contribution is taxed before it hits your KiwiSaver. If you check your payslip, you will see how much your own contribution is and how much your employer contribution is each time you get paid. Depending on how much you have contributed personally to your KiwiSaver between 1 July in the current year and 30 June the following year, you can also receive an annual contribution from the New Zealand government. The magic number to remember here is $1,042.86. If you have personally contributed at least this amount, then the government will pay in the maximum government contribution of $521.43. For any amount you have contributed which is less than the magic number, the government will pay in 50% or half of what you have contributed. You must be aged between 18 and 64 to receive the government contribution. For anyone who isn't in a salaried job, it is still worthwhile setting up KiwiSaver so you can receive the government contribution each year. You will need to enroll directly with a KiwiSaver provider since you won't be automatically enrolled with one through an employer. You can set up voluntary contributions so that you are making regular payments into your KiwiSaver. As long as you have contributed $1,042.86 to your KiwiSaver between 1 July in the current year and 30 June the following year, you will receive the maximum annual government contribution of $521.43. So I've talked about how you can contribute to your KiwiSaver, but when can you withdraw or take money out of it? Because the aim of KiwiSaver is to help New Zealanders set up a long-term savings habit for their retirement, there are limited opportunities to make withdrawals before the age of 65. You can withdraw all the money in your KiwiSaver except for $1,000 in order to help buy a first home in New Zealand. You must have been contributing for a minimum of 3 years to be able to make a first home withdrawal. If you move to Australia permanently, you can transfer your KiwiSaver to an Australian superannuation scheme. If you move to any other country permanently, you can withdraw all of your KiwiSaver money except for the government contributions once you have been living in that country for over a year. There are also certain financial hardship or personal medical situations in which you are able to withdraw either part or all of your KiwiSaver money. Otherwise, after the age of 65, you are able to freely make withdrawals whenever you want or need to. Part of what I do as a KiwiSaver advisor is to help my clients come up with a strategy for making withdrawals after the age of 65, depending on what they wish to achieve. You might be wondering why you need to save for your retirement, since the New Zealand government pays a superannuation to anyone aged 65 and over each year. The reason why is because it is financially difficult to be able to live off superannuation payments alone. Currently, the New Zealand government pays between approximately $400 and $520 per week after tax to anyone who is entitled to receive superannuation payments, depending on what their living situation is. If you think about your own weekly expenses, would you be able to meet your living expenses and have money to enjoy your retirement on between $400 and $520 a week? That is why KiwiSaver exists, to be able to supplement New Zealand's superannuation payments. Now that we have considered how the KiwiSaver scheme works overall, I'll spend some time talking about questions I'm often asked about KiwiSaver as an advisor. One question I am asked is, what happens with my KiwiSaver when I am on parental leave? This depends on what your contractual arrangement with your employer is, but assuming you are not receiving any paid parental leave from your employer and you have registered to receive the paid parental leave entitlement from the government will contribute 3% of your KiwiSaver in lieu of your employer's contribution, as long as you are continuing to make an employee contribution from the payment you're receiving from the government. Making contributions while on parental leave will also mean you will be in line to receive the annual government contribution. Continuing on the family theme, I also get asked whether it is worth setting up KiwiSavers for young children. This depends largely on your aspirations for your children. For example, if you are keen to see them well set up to purchase a first home in New Zealand, then this would be a good reason to start a KiwiSaver for a child at a young age. I can work with you to select a suitable KiwiSaver for your children and assist you to set up regular payments into it. All KiwiSaver providers have some sort of digital presence, be it a portal or a phone app, and this presents a good opportunity to introduce children to the nature of investing from a young age. For example, you can check their balance periodically with them and see how it changes over time. When your children are old enough to start working, they can begin making their own contributions and start receiving employer contributions and the government contribution at the age of 18. And thanks to you, they won't be starting from scratch. My clients also often want to know what happens to their KiwiSaver when they pass away. When you die, your KiwiSaver forms part of your estate, which is the legal term for everything you own and everything you owe. Your will spells out how your estate is to be distributed or split up between the various people that you wish to see receive parts of your estate. For this reason, it is important to make sure you have a current and valid will. But the question I get asked most often as a KiwiSaver advisor is, what's the best KiwiSaver? And my answer always is, it depends. It depends on what's important to you and what you are trying to achieve. For example, if you are trying to achieve the highest possible returns on your investment, or is it important to you that your KiwiSaver is both invested ethically and gets good returns? These are the kinds of questions that I'd ask you so I can recommend a KiwiSaver provider and a fund that is best suited to your own personal goals and aspirations. I make it easy for you to select from the 30 KiwiSaver providers that are out there in the New Zealand market by recommending a provider and fund that suits you. Then I help you get set up with that provider, and afterwards I'm available for ongoing advice and support to help you make the most of your KiwiSaver.